Good evening, traders. In this video, I will be sharing with you in details how I plan to take advantage of a bullish momentum here on the GBPJPY. Here on the daily time frame, it is very obvious that we've been on a bullish momentum since the beginning of the year. But I would like to zoom into what has been happening since mid-May, as we can see our price has been trending on the high side. And if we draw and connect the series of higher lows rather, we will notice that we have a bullish trend line to use as a guide going into the new week. Now, the bullish trend line is the one you have on your screen on the black line, and I shall be using this as my guide going into the new week. The first thing we will observe since the beginning of the month is that price has been trending to the high side, as we can have a bullish impulse leg to use as a second parameter, as after every impulse leg we do understand from a technical perspective that price will do a retracement before a trend continuation in the direction of the prior leading price action. So in this regard, I want to pull out my Fibonacci retracement tool to identify where the retracement has ended, or are we still going to have an extension of the retracement as we head into the new week. So following our golden rule, we want to see a retracement into our golden zone area, and from this structure we have here in the market, we have it between the 618 and 78.6% of the previous impulse leg, which at this point in time shall be the buying opportunity zone for a trend continuation to the upside. So I shall label this, excuse me, I'll label this a buy opportunity zone. Let's place it right in the center of the box. So let's delete this at this point. So now you will see how the retracement into the golden zone shares a confluence with the bullish trend line we identified earlier. In addition to this parameter, we still need one more thing that will guide our action going forward. The next point is to identify a key level that shall be our yardstick, as this will definitely guide our action into taking advantage of either a bullish or bearish momentum in the new week. So if we look left, we can see that this area at this point, at one point in time being a supply zone, we have a supply zone, a demand zone around this area. We had a supply zone here, supply zone here, supply zone here. And if we can see, you agree with me that this is more or less a significant area, as this area has been a major determinant of the direction of price action. So let's bring out our line chart at this point and let's connect the series of supply and demand we identified earlier, and we will have price around the 162.3, I guess. I think 163.2 will be our major key level as we head into the new week. So give me a moment to give this a gold color, and we'll label it 162. I think 162.5 will be most appropriate. Key level at 162.500. Give it a gold and place it at the right hand side of our screen so that we can have an eye on this as we go on with our analysis. So this is what we have here at this point. We can see that the buying opportunity zone shares a confluence with both the key level at 162.500 and the bullish trend line around that area, making this area more or less a very significant and sensitive area we need to watch out for as we head into the new week. So right now, as we have understood that after every impulse leg, we look for a retracement where we look for patterns that support a trend continuation to push price further up. And if we look at what happened in the later part of last week's trading session, we saw this hammer candle and we saw this bullish engulfing candle giving us a clue into the strength of the buyers at this juncture in the market. So let's scale down to a lower time, like for the 4 hours time frame, where we can now determine how we could enter this buying opportunity we just identified here on the daily time frame. So if we move down to the 4 hours time frame, this is what we have here. The first thing I will tell you at this point is this: we saw this retracement move, and at this point, I see something that looks like a double bottom structure, which is more or less a strong reversal pattern where price rejected the 161.500 area, which is within the buy opportunity zone we identified on the daily time frame, and we saw a breakout of structure. And I'm of the opinion that price will come back to do a retest of structure to do a confirmation of a trend continuation to the upside. So now that we have identified this reversal pattern within this area, we want to identify a key level that will also be the neckline of the reversal pattern, which we always know from a technical perspective that the retracement of the breakout of the neckline should retest the neckline one more time to give us a confirmation that price is going to the upside. So let me bring out my line chart at this point and let us identify a neckline that we shall be using to do confirmation of our bullish signal. So I would like to give this a purple to differentiate it from our key level, our major key level. So we have our neckline sitting right at 164 Japanese yen, which is more or less a very strong psychological level. So now I want to see price do a retest of the structure, and it might as well go as far as touching this bullish trend line or this key level at 162.500, after which I want to see structures that support a trend continuation to the upside. However, to be on the safer side, I would advise that we do have our entry point right above this neckline. That is, if price comes further down, where we would be expecting to take advantage of a buying opportunity at around 164, right above 164 Japanese yen, with a stop loss sitting right below the previous low, and that's around 87 to 90 pips. And then in a long-term perspective, where will our take profit target be? If we look at the impulse leg here, definitely we want to use this impulse leg to determine how far we will be going from the buy opportunity zone we identified here. So we project this into the future. And if we bring out our Fibonacci extension tool for the sake of clarity, we do and run the Fibonacci extension tool along the impulse leg we identified earlier, we should have a TP target right at aiming at around 127.2% extension. So I will just suggest we use 171 area for now, which is around 700 pips on the long-term perspective. However, I don't think this will be achieved this week. And because of that, definitely we want to be looking for a short-term perspective. And if we look left, if you see what happened here, we saw a double top structure before the breakdown of the neckline to send price crashing. So this area at this point, the breakdown of this neckline will has a potential for selling opportunity. If we look left, we can see that, and I want to be using that as my take profit target in the meantime, which will dovetail to about how many pips? from here to here, that's around approximately 300 pips. And if we do see price break out of that area and do a retest, then we might be thinking of adding more position to this trade. So this is my perspective here on the GBPJPY as we head into the new week. And I would like to pause the video at this point. Please follow me on my TradingView platform so you don't miss out on the regular updates I share in the comment section at every point in time. Thank you for watching, and I hope the data herein will be enough to help you make individual investment decision in this regard. Do have a wonderful day and good night.